Governor of the Central Bank of Nigeria, CBN, Mr. Olayemi Cardoso, has declared that no one has a monopoly over the economy, stressing that the economy belongs to all. Cardoso stated that the progress so far achieved in the past 2.5 years amid bold reforms must be protected. The CBN Governor reaffirmed the Apex Bank's commitment to credible policies, transparent markets, and sound governance, all of which had helped to restore investor confidence in the financial system since he assumed office in 2023. Also, the Minister of State for Finance, Dr. Doris Uzoka Anite, revealed that the federal government was currently working to establish a unified national framework that will bring together both monetary and fiscal instruments to drive structural transformation. Joining us on this show to discuss the progress in economic reforms, as CBN Governor Cardoso affirmed that the economy is gradually stabilizing and turning the corner, is Professor Uche Uwaleke, President, Capital Market Academics of Nigeria. He also touched on Nigeria's Eurobond, which was reportedly oversubscribed in the heat of Trump's threat of invading terrorist strongholds in Nigeria and the capital market loss of 4.6 trillion naira in just a day. Good morning, Professor Uwaleke, and thank you for joining us on the morning show.
Morning,
Prof. Good morning, Dr. Batty.
Good morning.
Good morning, Professor Uwaleke.
Morning. God bless
I'm delighted to be.
Yeah, Prof.
I'm delighted to be on the show. Thank you.
Good to see you. Well, there's been a lot of chest beating on the part of the CBN governor, the Minister of State for Finance, and even the President himself, who was telling editors yesterday that the economic reforms introduced by his administration have yielded positive results. You may add to that, it's not just the persons I have named, I've mentioned that are, chest beating. Even international groups, World Bank, IMF, we have seen them writing reports and saying Nigeria is on the right path with economic reforms. Even if the IMF said, look, some attention should be paid to social security and the welfare of the people. So do you think we are on the right path? Or do you think that there are omissions? Or do you think that the self-congratulation is too much of advertisements for myself, as Norman Mailer says in a book of the same title? And then the second thing, this Eurobond, it also came up at the Guild of Editors conference yesterday with, one of the government persons saying, oh, the Eurobond being oversubscribed shows that there is investor confidence in the Nigerian economy. And that is a major achievement of the Tinubu administration. Well, how much confidence and trust do investors have in Nigeria at this moment?
Yeah, thank you so much, Dr. Batty. I agree with the view that the economy is gradually turning the corner. I subscribe to the view that the reforms, are beginning to yield, positive results. There's no doubt that the economy today, compared to last year, for example, is in a better shape. At least the numbers say so. If you are looking at the inflation rate, for example, we have seen moderation in inflation rate to the point where it is today, 18.02%, from a high of over 30%. The rebasing, notwithstanding. We've also seen considerable stability in the forex market, exchange rate stability, and of course accretion to external reserves on the back of central bank reforms and the transparency measures they introduced in the forex market. The reforms have also led to a situation today where for a long time the country, of course, wasn't recording current account surplus, but that is what we are doing today. So macroeconomic stability is what is engendering this confidence in the economy. not only from domestic investors, but also from international investors. And you've also seen what has also happened in the stock markets. Again, I would also say one of the spin-offs of the reforms. Today, year-to-date return in the market is above 35%, even close to 40%. As a matter of fact, but for what happened last week and just recently, we were year-to-date return was in excess of 40%. So the market this year has performed relatively well on the back of these reforms. What are these reforms? Dr. Batty, I'm specifically referring to the, of course, fuel subsidy removal that came in the wake of the onset of this administration, the unification of exchange rates, and we also know why that was done to bring sanity and transparency in the forex market, and more importantly for me, the tax reforms that will be kicking in January. The tax acts that will be kicking in January, the implementation. So I think these reforms in totality have contributed to the kind of confidence that the economy is now enjoying, not only from domestic investors, also from international investors. We have had, favorable credit, ratings from these people. And you can also tie it to the Eurobonds thing that, we just issued, which was also largely successful, oversubscribed. It's also a reflection of the fact that, yes, investors out there, have some sort of confidence in the economy. But let me also say this, that yes, the macro numbers are, improving. But it's also important to recognize, just as the World Bank also mentioned, that the macro numbers, improvement in the macro numbers is one thing. The lives of the welfare of the average Nigerian is also another. So going forward, the effort should now be in ensuring that these macro numbers, positives we are witnessing, also reflect, also translate in, improved welfare conditions for Nigerians. You have inflation rate, for example, moderating to 18.802%, as I mentioned earlier. You have GDP growing at 4.23%, the last GDP number that we had. But at the same time, the World Bank is talking about increase in poverty rate. So this should concern us. And I think this is also the point where beyond the chest beating, particularly for optics, of course it's good for optics' sake. Beyond that, we should also sit down and then try to find out how can we make this growth, inclusive? How can we make the ordinary Nigerian now feel the impact of these gains? And I think even the numbers released by the National Bureau of Statistics, will help. If you look at that GDP growth figure by the National Bureau of Statistics, the services sector was, the majorly responsible. Manufacturing sector and agri sectors are still in the doldrums. So now I think these are the areas we should, focus on to be able to achieve inclusive growth.
All right, thank you for talking about inclusive growth and the fact that, from your perspective, that investor confidence has increased. Well, how then would you describe the historic single-day plunge of loss of 4.6 trillion naira in the capital market, and how does that bear with investor confidence, and of course in line with what's happening between Nigeria and America and the threat of the US president that they will bring, invade or at least come in to the country with military, especially against what they've said to be Christian genocide in the north. What do you have to say about this, and how does that bear on your take on investor confidence? Yes,
of course, the markets, when I say markets, financial markets in general, especially the capital market is highly sensitive to information. So what we saw happen, the week before last, where the market lost over 2 trillion, and then recently, where the market, just in one day, that's 2 days ago, lost over 4 trillion, is reflective of what I just told you about information and markets. So once you have a negative news out there, it rubs up negatively on the market. I may not ascribe it, strictly to what, the threat from Donald Trump, but it came more from the information, again, largely, some of it largely uninformed, information that went out with respect to the capital gains tax that the government will be implementing from January. So because that information went out, and then a lot of reactions happened, particularly from foreign investors who pulled out their investments. So that is what we saw. But we have also seen that after the minister went to the exchange and made the comments, and the chairman of the Presidential Fiscal and Tax Reforms Committee also made clarifications with respect to the CGT. We saw what happened yesterday. The market rebounded and they gained over 2 trillion. Now that clarification has to do with the fact that of course the CGT is not going to affect, for example, institutional investors who are already exempted from corporate income tax, like the pension funds, like the real estate investment trusts. It's also not going to affect small companies, those with turnover of 100 million naira, below, or assets of 250 million. So these clarifications helped, particularly to when they made clarifications with respect to arrears. What is now known as grandfathering of the gains. So, for example, people thought that if they bought shares for say 10 naira and the shares are sold for 20 naira, that they will be taxed on the gain of 10 naira. Okay, so but the clarification now says it will not affect accumulated gains, made before 31st December, regardless of when it is sold, that such gains will still be taxed at 10%. So the clarifications helped to now, calm the market, as it were.
Okay. It's good you talked about the calming of the market, but let's go back to the rebasing. Were we being sincere with ourselves when we reduce the weighted average that food takes in our inflation baskets? Because a lot of analysts also say that also has a knock-on effect on the trickling down of inflation, which might not be a true reflection of what is happening. Secondly, the idea about when subsidy went was to be able to have fiscal leverage and head space to be able to do other things. But we're also having a cycle where we are running concurrent budget cycle, I think about 2 concurrent budget cycles. Budget performance is dwindling because we can't even fund those budget cycles. And at the same time, we are borrowing so much. Recently, we have a Eurobond demand coming up, I think around November. And we have to even go back to the Eurobond bagger to borrow to offset the initial Eurobond demand. And we claim we have $43 billion in our reserves. What's going on?
Yeah, Rufai, maybe I should start from that second point. I must agree with you, and this is my personal view. I have done a lot of papers on, Eurobonds, and my personal view is with respect to Eurobond, we shouldn't be resorting to Eurobond financing as a strategy. We have, as I speak to you, we have, if you check the DMO website, we have 14 outstanding Eurobonds. The last one is going to be paid back in 2051. And Eurobonds are usually subject to bullet repayment. So each time we go to borrow from the Eurobonds market, by the way, Eurobonds are regarded, part of why I do not subscribe or I do not support the idea of going to the Eurobonds market all the time is because, number one, they are expensive. Eurobonds are expensive compared to other, forms of loans. If you look at our external debt, profile today, you will realize that the Eurobond component there is around $15 billion, okay, accounting for about 36% of the external debt stock. Whereas in terms of service, it's accounting for over 55% of debt service. Okay, so that tells you that it's expensive, and that tells you that this is not, a source of finance, a source of funding that we should always, have recourse to. We started this journey in the Eurobond market in January 2011 with just $500 million. And today we are talking about $15 billion, and each time they mature, all we do is to refinance. We go to borrow to be able to pay back. So I don't support that kind of, strategy. I think that we should be making plans to retire them and, see a way of, reducing our obligations to the Eurobond market because of the various risks associated with it. Tomorrow, if U.S. interest rates rise, tomorrow, if the dollar strengthens, that also means that the cost of servicing these Eurobonds, will continue to rise. So commercial debts, for me, should be de-emphasized. I think I'm in support of borrowing, of course, for infrastructure, borrowing for projects, but not when you borrow, and that borrowing is, has a discretionary feature. Discretionary feature in the sense that when you take money from Eurobonds, it doesn't say specifically where the money must be applied. The international investor who is taking your bonds is simply interested in how you repay such money and not what you put the money into, as opposed to the multilaterals, for example, getting from the World Bank, African Development Bank, Islamic Development Bank, or as opposed to even the bilaterals. Okay, China, the French, France, Japan, India, and Germany, and so on.
Yes,
so my point is this: that going forward, that we should try to de-emphasize, commercial debts and see how we can borrow, do more concessional loans.
And I guess we should borrow for productivity, not for elite conspicuous consumption. Thank you very much, Professor Uwaleke.
Absolutely. We should borrow for capital, not for recurrence. Thank you. Thank you, Dr. Abadi.